Hello and welcome SA Women Tribe. My name is Ali Garrett. I'm from All In Advisory. I am a chartered accountant and business advisor, and I specialise in the tourism and hospitality and medical fields and also cloud specialisation, but I do cross all genres. So I have worked with business for over 25 years now, and I'm looking forward to sharing a few pearls of wisdom to you all, and hopefully you'll all get something from this live recording today. So what I wanted to discuss was really about how to get to know your business. We all enter business because usually we are passionate about what we do. We have a service or an offering that's unique or different, or an innovation that we want to get out into the big wide world. But sometimes we may not have that financial knowledge behind us to ensure that the sales that we get through the door are converted into profit, and then that profit is converted into cash. Very, very critical and important component to work through. So with anything that we do in business, I always like to go back to our why, and I always start there because it's different for everybody. And what do I mean by that? Well, some people go into business, well, most of us do, hopefully, to make some money, but some of us don't. Some of us do it for lifestyle. Some of us do it because they're in a family business and they want to provide wealth to future generations. Some of us, and this is partly me, love our work and, we want to make a difference. And also we're, hoping to build a nest egg for our retirement. The reason I bring us to our why is because our why guides our business decisions. So if we have a why of that we want to make a difference, we wouldn't necessarily be out there to make huge amounts of profit from people. But if the ultimate goal is to make profit, then obviously sometimes we're going to make different choices. I'm not making judgment, just that everybody goes into business for a different reason. And so with everything that you do in your business, make sure that your why is prevalent and that the decisions that you're making are very aligned to your why. So now that we know what our why is, I want you to think about your business as we're going through this. But the story I'm going to be talking about today is around Jack. Jack and the beanstalk. So he sold a cow for a magic bean. But in this story, Jack was quite clever, and he's changed things up a bit because he likes to do a bit of change and innovation, which I don't mind myself. So Jack tells his mother they're going out of the dairy business and they're going into crop production. So what does Jack need to know to grow his beanstalk up to the sky and into the cloud and bigger than everybody else's? So let's have a look at what Jack knows. Where do we start? We start from the very beginning. We start with something that people don't often look at in their financial reporting, but something that is so critical and so important, and I believe is truly foundational to every business, and that is the balance sheet. Sometimes people haven't even seen or looked at their balance sheet. I had a client that had come to me once and didn't even know what it was. So very important that we start to understand what our balance sheet is in our business and how it drives the performance in our business. The balance sheet reports the financial position at a point in time. So it looks at it, say for instance in our world, at 30 June we report. It's also cumulative, so it accumulates over a period of time. The balance sheet looks at your assets, it takes off your liabilities, and hopefully there's a little bit of equity at the end. So let's have a deeper dive into what that balance sheet looks like. First of all, there are assets. It's what you own or what the business owns. It could be cash on hand or cash at bank, any term deposits you have, any people that owe you money, any stock that you are holding, any land and buildings, plant and equipment, any goodwill that you've purchased or built over a period of time, any trademarks or any intellectual property, so things that you've innovated and things that you own. Next, we start to look at the liabilities of your business. So that might be what you owe. So that could be that you have a bank overdraft or people that you owe money to, such as trade creditors. It looks at your credit cards, any loans that you have, any hire purchase liabilities. It also looks at any GST you owe at any point in time, any provisions for tax, so income tax that you owe, any provisions for entitlements around annual leave and long service leave for employees, and any accruals of expenses that you know are coming up. So your assets minus your liabilities should bring you to your equity section. This is different depending upon the structure that you have, but in some businesses, it's what you get. It's the capital, your current year profit and loss, any retained earnings if you're in a company. And what we're hoping for here is that the assets are greater than your liabilities, which hopefully means you've got some value in your business. So as you can see, if we discount this report, then you're not having an understanding of what your assets and your liabilities are, and therefore what value is actually in the business. Very, very foundational and critical to understand in your business. So Jack knows this about his business. He's got the great soil. He's got his great foundation in order to help grow some of those seeds. But what else does Jack utilise? What he's looking for is growth. And in my world, that means a bit of water. So if we look at that, the water is going to help those seeds in the soil grow. And that's our profit and loss statement. This is usually the report that people understand the most or have at least seen and recognise. But you shouldn't use it in isolation because otherwise you will make incorrect business decisions. So let's look at what that is. The profit and loss statement reports a business's performance for a period of time. In our world, that's usually 1 July to 30 June. And each year you start again. And any profit or loss is pulled over to the balance sheet and depending upon your structure is retained or distributed out. I'm not going to go through that today because I don't want to get too complicated. So on your profit and loss statement, you look at your income, you take off any cost of sales for that income, which gives you your gross profit, which is a very important key performance indicator. You then take off all your overhead expenses and hopefully you've got some profit at the bottom line. If you have systemic losses year on year, I would call you a charity and that you desperately need to look at what you can do in your business to turn that into a profit. So let's have more of a deep dive into what this profit and loss statement looks like. So from an income perspective, this is the income that you earn or what you earn or bring into that business. It usually comes through the form of sales, some interest received, dividends or distributions, any sale of assets. Then we look at the cost of sales. So what is the cost of each of those sales? These are like your variable expenses. They go up and down depending upon the income that you're bringing in. So it's what it costs you to earn the sale. This would incorporate the opening stock, any purchases that you might have, any freight on those purchases, any direct wages and on costs like direct sales, wages, etc., production wages. We then take off the closing stock, which gives us a gross profit number. And as I said before, gross profit as a percentage should track on par year by year and hopefully improve if you're making some decisions in your business around improving profit. And hopefully that goes straight to the bottom line. The next one is the overhead expenses. Every business has them. They're the fixed costs, the things that don't go away no matter what your sales number are. And obviously the higher your sales number, then proportionately the lower those expenses are against those sales. So what are the expenses? Well, it's what you pay out. So it's looking at all the overheads. That could be accounting and professional costs, insurance, interest and bank charges, any rent, light and power. And it can incorporate so much more than that. So hopefully, once you've got your income, less your cost of sales, less your expenses, you've got a little bit of profit, which will allow you to invest into your business and grow, and we should all be happy little Vegemites. So Jack understands both his balance sheet as the foundation of his business, and he also understands his profit and loss statement and what's included in there to help that business grow. So he's got 2 out of 2 so far. So you can see why his magic bean is growing to higher levels than others. But there is one more. What? One more, you say? Yes, one more. And this report is what people get confused with what's sitting in your cash at bank. They think that your cash flow is what's sitting in your bank account. This couldn't actually be further from the truth. So this report is what I call the accelerator. It's the fertilizer, because if you've got your foundation right and the growth right, If you have your cash right, then this is where your business will stand out and you will start to reap the rewards of all of your hard work, because the profit will then turn into cash, which you can then either reinvest or take out of your business as you see fit. So your cash flow. As I said before, it's not just what's sitting in your bank, and this is where people get a bit tripped up. They assume that the cash flow is based upon your profit and loss, when in fact it is actually a combination of your profit and loss movement, but also the movement in your balance sheet. For instance, it's your income less your costs, less your loan repayments, or your movement in stock, or your movement in debtors or creditors. Really important foundational part to understand in your business. I often get asked, Ali, you're telling me I've got profit, you're telling me I've got tax. I do not have the money to pay that tax. This is where you will find where the cash has gone. So let's keep going. It's the net amount of cash moving into and out of the business. So you look at your opening balance, the cash in, the cash out, and your closing balance. Let's take a deeper look. First of all, you have to know what you started the balance with. So once again, this is an annual thing, very similar to the profit and loss statement. It's annual, not cumulative. So you look at all the cash reserves, so cash on hand, cash at bank, any term deposits. You then look at the cash coming in, which is your sales, asset sales. You can see here the balance sheets coming into play, any debtor receipts. For those of you lucky enough to have businesses where you're paid pretty much on delivery or there's no debtors, lucky you. I do not have one of those businesses, so part of the strategies for me is to manage my debtors. Other income, any new loans that may have come in, because that's cash coming into your business. Then we look at the cash going out. This is the bit that hurts people. Are you with me? The purchases, the expenses. Once again, here's the balance sheet, loan repayments, equipment purchases, and it excludes depreciation and non-cash items. This will get you to your closing cash balance, which is your cash on hand, your cash at bank, and your term deposits. Now, hopefully, your closing cash at bank is higher than your opening cash at bank or your opening cash on hand. So that gives you an idea of the three reports that are so critical to understand in your business. Working together, the foundational balance sheet, the growth in your profit and loss statement, the fertilizer in your cash flow. If you get all those three together, which Jack well knows, it's magic. And this is where your business can reach to the clouds and do better than others. So critically important on how to better understand your business. And once you understand those three, you have gone a very long way to making better decisions in your business. Let's go just that little bit further. What are the levers to improve performance in your business? So first of all, we need to look at some smart outcomes. So for every decision we make in business, we have to make sure that it's specific. So state exactly what you want it to accomplish, the who, the what, the where, the why. It needs to be measurable. How are you going to measure it? How are you going to show that you've reached your goal and that you've met it and by how far? It needs to be achievable, you know, these good, great, awesome goals. So reaching your goal should be realistic and not out of reach. It needs to be relevant. Is it aligned to your why? And it needs to be time bound, so you need to set a target on time. So for every lever that you pull in your business, make sure that you have a smart outcome attached to it. So how do we increase our asset value in our business? For Jack, it could be that he's investing his cash. So looking at if he's got term deposits, the rate of return, or if he's got cash lying around, is it in an income or interest bearing account? For his debtors, is he managing his debtors? Is he putting in pay on time discounts? Is he following up and doing debtor reminders? Because if you're struggling for cash flow but you've got profit, it's usually sitting in debtors. Is it sitting in his inventory? If you have inventory in your business, if you have obsolete stock or you're not moving your stock quickly enough, you are literally sitting on cash. So the best thing to do is to move that stock on quickly. So to look at the sale lines and see what's selling, what's not. Do you put some stuff on sale to kind of move it through the door? You don't want to pee other people's banks. The other thing is with your plant and equipment. Do you have the right plant and equipment? Is it at the point in time where you might need to replace it because the repairs and maintenance might get too high? In relation to land and buildings, same thing. Are you looking after that asset? Are you making it as productive as possible? I had a client who was a restaurant cafe. They had a large kitchen. They actually started to rent out part of their kitchen to maximise the profit that they could receive. And also intellectual property, so critically important for increasing assets and something that we forget about. If you put all of your processes down and map them out, that is potentially a saleable asset. So it's IP, it's innovation, it's all of your ideas, it's the licensing, the copyright, the trademarks. If you put some time and effort into that, you're going to increase your assets. So maybe you can start to think about how to increase your assets, looking at how to improve your debtors and your plant and equipment, your goodwill, your inventory, your land and buildings. So I'm not going to stop to allow you to do that now, but maybe you can do that in your own time a bit later. The next part is we want to decrease our liabilities in our balance sheet. So for creditors, make sure that you're paying them within payment terms. Are there pay and time discounts? Are you with the right supplier? Have you looked at potentially moving to a different one? In relation to your financing, when Jack started his business, the bank deemed it a bit risky. That magic bean startup sounds a bit risky, Jack, so he had a really high interest rate. Now that he's established, he's made profits, he can go back to the bank and say, okay guys, let's check out my interest rate. Am I at the right facility? Do I have the right mix of short-term and long-term debt? Making sure that you're not paying more for the funding that you need. Looking at your workforce, this is more around making sure that your leave entitlements aren't getting larger and larger. So your people just aren't taking leave and then all of a sudden they leave you and you've got this huge entitlement to pay out. Make sure that you're managing their employee entitlements around annual leave and long service leave. Also good for OH&S, you know, they need a break. They're more productive for you. And then this one here, back in the day, you could leverage cows for magic beans all day long and the government stayed the hell out of it. Well, I can assure you they do not today. Making sure that you have the right tax structure will actually help you from a cash flow point of view to make sure that you're paying the right amount of tax and that we're minimising it where possible and that you're not paying tax where you just don't need to. So that's our balance sheet. Once again, in your own time, maybe think about how you might be able to decrease your liabilities in relation to refinancing, in relation to payment of creditors, in relation to the structure that you have, and employee entitlements and making sure you've got the right policies around that. So let's also have a look at our profit and loss. How are we going to increase income? Well, this is, I believe, is about sharing your story. In business, we all have one. What makes you different from the person next to you? It's your ability to share your story and utilising the socials that are available and that are current and that are right for your industry. Find them, work them well. It is a very cheap way of getting sales in the door. The next one I found in my own experience is to really stand out from the crowd, to be different. What makes you different from the person next to you? Or, you know, are you able to bring new ideas, new innovations? Are your staff able to do that for you? Making you different and making you stand out in the crowd can direct people to you for a specific reason. The next one is, are you looking at all of your income streams? Are you online? Are you in the cloud? It's amazing. The stats are that if you're in the cloud, you actually have 2 times higher income and that staff are actually more attracted to your business. And the next one is looking at new revenue streams or working with people and joining into joint ventures or alike to bring a holistic service to your clients. So bringing in different and new income streams around innovation, around the cloud, sharing your story are all great ways to increase your income. So how might you increase your income? Is it around being authentic and pushing that through your socials? Is it around standing out in the crowd and being different and innovative? Is it online and growing your region? Or is it the new income streams? Now let's look at decreasing expenses. Now when I say this, it tends to be the first place that people go, and sometimes they decrease their costs so much that their service or their product is hampered. Do not do that. So what I tend to do is say, look at our top 5 expenses, which is usually around wages and salaries, purchases of stock, rent, light and power. Look at your top 5 expenses and see what you can do to reduce them without impacting service or product. So this is about doing things differently. Look at the systems and internal processes that you have in your business. Can they be done better? What stupid things are we doing in business? And we all do it because that's the way it's always been done. But do things differently. Do research. Research on competitors. What are they doing? Research on suppliers. Is there a better way of doing it and better way of purchasing? Look online. It is cheaper. There are more deals out there. And even moving your software and your systems to online. And what do I mean by that? By building a cloud ecosystem. So you might have your point of sale, your HR, your accounting, your purchasing and invoices, all on the cloud with different products that integrate and automate, which is something that we do with our cloud solutions, but it brings great saving and great value to businesses and gives you that real-time information and accurate information. So once again, as I said, moving into cloud with that integration and automation. And then looking at your workforce. This is where sometimes the hardest decisions need to be made. Do you have the right staff at the right level, working at the right rates, at the right hours? This is a huge cost to business and you need to make sure that you are on top of it. So decreasing your expenses, look at your top 5, reduce costs without impacting service. Question if it's needed. Look at researching, negotiating, swapping. Look at online and the cloud ecosystems, workflow scheduling and capacity. If you start to make changes and pulling some levers around these different types of income, expenses and balance sheet items, you will see differences in your profit line, and then you will see that profit turn into cash. So what I would highly recommend to you is, after watching this, to make a change. So whether that be to increase your assets, decrease your liabilities, increase your income, decrease your expenses, I think it's so critically important that you do that. And then consult with a peer, consult with a professional, talk to somebody. We so often work in silos, but what I've also found in my experience is that we do experience, although we're in different industries, we do experience the same pain points. Consulting with somebody who's been there and done that, you'd be amazed at sometimes just the light bulb moments that will help you to kind of switch on and make that difference and change. And I implore you, if you just do one thing, is to take an action. It can be the smallest action, or it can be like a short-term action that's really quick and fast, or it can be a bit, bigger bang with a longer fuse and require more investment. But whatever you do, please, after watching this, make some action or take some action in your business, even if it's around understanding your business better. Because the biggest cost is doing nothing. So don't be like these guys. After seeing his neighbour Jack and his success with the magic beans, Morty sold the family cow for some less successful rhubarb seeds, but I don't mind a bit of rhubarb. And well, Jack, I think you were supposed to plant those beans, not eat them. Be smart. We are so savvy. Be smart. Use the information that you have in front of you. I hope that you have received some benefit from the information that I've provided to you today. I'm more than happy to field any questions. We do have some workshops coming up, actually one this evening on Show Me the Money, which is specifically focused on cash. We've also got one coming up in August on how to improve your profitability, and one later on in the year around future-proofing your business. Thank you so much for listening, and I truly hope that you get some value. I'm so super proud of the SA women and what we're able to achieve. Let's support each other and build each other up. Thank you.